Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on gold, the miners, and the dollar. So the dollar bounce playing out is not really strong at this point, and it is a potential bear flag where you have a drop and then a horizontal support and resistance line here as the bulls try and see a bounce recover, but they just don't really have much momentum here. We do have a little higher low and a higher high, but we're fading a bit. So this is a bear flag setup at this point. If we were to break down and lose this higher low of 92.93, that would increase the odds significantly that it is a bear flag and we're going to see lower lows. The bulls have to break the high of this bounce, 914, and 915 is a little double top. And if we break that level, that will be a significant point in terms of negating the potential bear flag. So we've been extremely weak for quite some time. The weekly time frame is trying to see a bounce play out, and it just does not have any momentum behind it. We are coming off of oversold, but there's no convincing closes. We have an upper wick of profit taking. Certainly looks like a bear flag as we've seen in the past on this way down, like this period back here in mid-June. A couple week bounce, upper wick of profit taking, and then a bear flag confirmation. So we need to be very cautious here. And if you are, well, I shouldn't say cautious unless you're a bear, if in a bear and gold, that is, or the miners. If you are a bull, you want to see the dollar break down. And if you are in cryptocurrency, you want to see the dollar break down. So we're looking at gold here on the daily time frame. We made a significant bull break, but we saw lots of profit taking as we hit the 1300 psychological level. So we are still rejecting from this resistance line. The highest close we've seen on gold in 2017 was up here at 1293, and we have rejected from this point now multiple times. So this is still toppy action on the daily chart, and that's a big bearish reversal inverted hammer. So we have to remain cautious at this resistance. In order for the bulls to see follow through convincingly, we have to see a close over 1300, and that would be very significant. But if we were to break this low of 1267 without being able to break this resistance, that would be a red flag. That would lose the higher low pattern that has been intact for the last 5 weeks on this daily time frame. So that's the important support to be watching, and resistance is 1300. This is a significant move for gold because this is the highest price we've seen in a very long time. The last time we were at these levels was November, the start of November 2016. We have gotten over our downtrend resistance. We have broken through a lot of resistances here, and after 1300, the next major level is up at 1337. So there is space to the upside. Just need to be cautious of that daily chart and the 1300 psychological resistance. GDX, not really responding. Well, obviously we saw that profit-taking candlestick on gold, so we see the same thing here on GDX. But just in comparison, I keep pointing it out in my videos, but you look at where we are on GDX on the weekly time frame, and we're back at where we were in terms of prices with June. If we were all the way back in November, we would be up here in the $25 range. So we are still about 4% lower than where gold currently stands compared to where it was back then. So we are still lagging gold. And that's a little bit strange because the market's coming off of all-time highs. So it's certainly not the market's fault that these bull miners are not doing well, nor is it gold's fault. It's just a lack of bullish action, really. So GDX did get some higher lows and higher highs. Most recent low of support is 22.42. Resistance is now 23.48, followed by 23.86 as the next major level. The weekly time frame, as you can see, we've been very, very tight all year pretty much after the first month of trading, and we're trying to get over this 50 week. We did get over it last week and trying to break the lower highs. So in order to break the lower high pattern, the key level is 23.86. That would be a significant start to the change in the trend that the bulls are looking to see. GDXJ also seeing a little bit more weakness. So we have resistance of 33.98. We got up to 33.95, so we didn't even break the high of August 1st. And then we have a bunch of other resistances, 34.21, 35.05. The key support to keep the bulls in control of higher lows is 32.46. And the weekly time frame here has not made a bull break. We're still very tight. We've got our lower highs, a few higher lows. Bulls have to break 33.98 as step number 1, and 35.05 to be more convincing. So these bull miners, while they are seeing the first signs of uptrend, are not seeing the strength correlated with gold that you would anticipate, and there is still a lot of work to do for these bulls. So we need to remain cautious. Definitely would be looking bullish more so than bearish because of this gold break, although we do need that gold convincing move over 1300, but it's just not the kind of significant gains. You have to be more patient. It's more slow and steady. Certainly not the environment that we saw back to start 2017, nor in mid 2016 in terms of the gains that were possible. So that's what we've got heading into this coming week. Again, for gold, key level must get over 1300, and the bulls really do not want to lose the daily higher low pattern by breaking 1267 key support. I appreciate you watching. Have a great rest of your weekend. We'll see you soon.